Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for Tuesday, June 28th, 2016. Hope you're having a good week. We have started out with a phenomenal week here. 7 out of our 8 stock picks that triggered worked on Monday. Most of them very, very cleanly. Some of them very, very well. It was just a solid stock trading day overall. Friday was decent, obviously, but Monday I felt like was even better, a lot cleaner action because the gap wasn't as big to begin with, although there was a gap, and we'll look at that in a minute. But volume's back, and trading is good. It's an interesting time of year here to have it right approaching the 4th of July weekend, the end of the midpoint of the year when things usually are slow. And here we are doing really good stuff. So I'm very excited about this. We'll see how long it holds up. We'll talk in a minute about the outlook for the rest of the week. And we've already talked about July, but we'll do it again. All right, so here's a look at the ES front month futures contract. This is the daily chart of the broad market. Overall, I mean, obviously we're down the last couple of days. That's good for us because we can make money. It's not that the world has fallen apart yet, but, if you look at what happened back in January, we started from about this level, a little lower, started from about 2080 and plunged to about 1800. So that was 280 points on a 2,000-point index. That was over 10%, and then came back. So here we are so far, from about 2120 down to about 120 points. It's only about 5%. So it's not nearly as bad as that. If I slide this back and look at August, remember we started that one also from the 2080 area or so and dropped down not even quite to 1800. So the January lows were lower than the August lows. This has been the story of the last year and a half, right? We crawl our way up and get dead flat up near 2100. And then there's just these really sharp corrections, and then we crawl back up, and sharp correction, crawl back up, and now we got another one. If you're sitting here right now thinking, this could be it every day, it wasn't that big of a deal, don't fool yourself. There's still a wave of margin calls that can hit if this downward bias lasts another day or two, and then they'll really shake everything out. So, anybody that's trying to find a bottom, first of all, that's always a waste of time. We teach everybody that's not how you trade and make money in the markets. You trade with the direction. Today, under our measurements, market direction was market direction was red the entire day. After the gap down, it was still red. You shouldn't have even been looking on the long side. We tried to make sure people were on track in our trading lab about that. And every trade we took was on the short side. They all worked. They all made money. You've got to make sure that the market is actually turning up before you try to buy anything when you're in this environment, because you will get hurt if you don't do that. And the other thing I wanted to point out here is we did get that sell signal back at the beginning of April to 13, and we used the risk line, that pink line, as resistance from it, and then that took 2 months to wear off. And, we did get above the risk line finally, so that negates the signal. But then again, it's an exhaustion signal, which means, you sat for 2 months. It kind of was the perfect signal. It exactly timed where the top of the market was after the run from February to April. But we never really got a sell-off from that. And we tried to make new highs in the market and failed. This is giving us a sell-off. So all I'm saying is one thing to be aware of is the red line. That's the static trend line that's currently locked in the market. That's down near 1880. And that could easily be a target. That's another 100 points lower, so don't forget that. All right, let's take a look at everything for the day and see how it did. Oil dropped, closed at 46.60. That's down $1.05. Gold was up $4.90, new closing high. S&P lost 36.87. That's the cash there index, breaking all the support from the last. We're new lows since March, middle of March there. NASDAQ side, new lows since the beginning of March. This thing never was making new highs, and now it's in trouble. Only thing I would say here, though, on the only contrary sign is we now have 12, right? You see that there? There's 12 bars down on the daily chart of the NDX. So tomorrow, if we're down again, that'll be 13. That'll give us an exhaustion to the downside. In other words, a buy signal. But we'll see, because there's still going to be a wide risk line of that. Keep in mind, because of the action on Friday, let's say we drop another 50 points tomorrow on the NDX, the risk line is probably going to be down near 4,000 or lower. So that gives us a lot of room to still go lower and not violate the buy signal. So just be aware of that. The SOX, which was the standout for a while, has now come all the way back into its range from earlier in the year. Here comes the red static trend line on that. Biotech's down 80. New closing lows on biotechs. Yuck. That is an ugly looking chart. We'll be looking to short the biotechs a lot on any move down in the market. They are the weak link of the majors right now. Amazingly, the VIX dropped $1.91. That's because it was up so much on Friday, I'm sure. Trend closed at 1.51. That brings the 10-day moving average to 1.15. NASDAQ volume was solid at 2.4 billion shares, not the 3.5 that we saw on Friday, but that was extremely high. This looks good at 2.4. I'd take anything over 2 every day and be happy about it. That would be a great volume. Advanced decline ratio, the single worse than Friday. Keep this in mind. The breadth of the market. 2,713 more stocks down than up on the NASDAQ. The worst day in a long time. Worse than Friday. Advanced decline ratio on the New York, on the other hand, a little bit better than Friday, but still very negative at negative 1910. Google only lost 4, and it actually had been lower and came back. Apple does not look pretty, down $1.36. Amazon down 760. That's kind of a blip for Amazon. It's still holding near highs. Netflix down $3.11. That's not pretty for Netflix. Tesla was actually up for the day, amazingly. All right, let's take a look at the intraday action in the futures, just so you can see. So, again, remember Friday you had gapped down quite a bit, little rebound right to that 2062.50 TriStar level. That was the top, and then we drifted lower all the way into the close. Well, little pop, and then drifted lower after that too. So we get a little gap down here on Monday. You'll notice that you got a Comer 13 buy signal on the 5-minute chart about an hour and a half in. That was the low. You get the pink risk line from that, and we never broke it. In the afternoon, we traded around, tried to play with it, but never actually got beneath that. So that exhaustion buy signal right there was the low of the day on the ES, gave it perfectly to you. Meanwhile, on the NASDAQ side, no signal, but look at that. Same action, obviously. So we've got gaps above, but I wouldn't worry about that right now. When you're gapping down in the market, you don't always come back up until later to fill them. Someday down the road, I'm sure we will. All right, so what do we have for economic data coming out here? So Tuesday, we've got the third look at GDP an hour before the bell. That's not a big number. It's not the same as the first look or even the second look. Case-Shiller 20-City Index at 9 a.m. Eastern Time. Consumer confidence at 10 a.m. Eastern Time. That's it. I still think Tuesday could be a great trading day. Because of all this stuff that's going on, heck, we could have great trading days all week. Usually you would expect things to slow down Wednesday in the afternoon because Thursday's end of quarter, end of halfway through the year, and the statements are printing and everybody has their positions locked in. But who knows in this environment? Maybe we won't. Maybe we will have some excitement all the way through to Thursday. Also with Friday, we have a Monday holiday next week, so people will be leaving early to head out on Friday, and so there's always the possibility there, that, or it should be the case, that Friday's pretty uneventful. But again, who knows with all the stuff that's going on here. If it wasn't for what's going on, I would simply tell you Tuesday still should be great. Maybe some opportunities Wednesday morning. We've got some minor data points Wednesday morning, and then probably people leave Thursday pretty boring, Friday completely dead. That's usually what you would expect right here given the layout of the week, but hey, who knows? Anything's possible. Charts as usual brought to you by eSignal 12. If you've not yet taken the trial of our services, feel free to do so. This is a good time right now to be making some money. We'll add a couple days to the trials because of the holiday that's coming up. Have a great trading rest of your week. We'll be back tomorrow night with a new preview.